All right, what's going on, guys? Today is Friday the 28th. What a great Friday it was today. Well, I mean, not for me because I got swerved, but analysis was on point, and I know a bunch of people got it. Also, a bunch of people got swerved as well. But you got to take the positives away from days like today. You know, it's today was my own mistake of over refining, and I just fell into it again. The risk to reward wouldn't have been much different. It was just again me getting caught up in the moment and over refining. So hopefully you guys can learn from that mistake. But let's go into it right immediately. Beginning of the day, this is what we were thinking. Boom, up right up to 1.1800s. That was the ultimate target. I said that I think that's what the high of the day is going to be at. And usually I only want to catch 70% of the the daily high, or sorry, the daily range. And so that's projected daily range high. I'm only looking to take out the liquidity pools and fill up a little bit of that imbalance, and I'm good. You know, I'm content with that for my day. Catching majority of the daily range, that's my bread and butter setup, rather than trying to catch like the whole range 100% and then missing your exits and stuff like that. So yeah, that was or we were anticipating right at the beginning of the day. You can see 6:47 a.m. all beforehand, right? You can see I inverted the chart and I said, this just looks beautiful. It looks like it's going to actually come down from here. There is a potential that it does go up one more time first and just take out that high. Or sorry, well, that's going to be the low. It's just the inverted chart. You can see here I had that this was the beautiful ICT accumulation, manipulation, distribution kind of pattern here playing out. Look at that. We tapped right into that 15-minute, I think, or 10-minute order block right there. We tapped into it. So anywhere from around these levels, like anywhere in that order block can be completely fine to take. So yeah, basically I said that's what I was looking at to target the buy side liquidity pools. And I said, this is the bearish option just in case, like there is the potential that it does come down one more time first and then go up. So you can see it here. I'm not trying to hide anything. Like that was definitely on the cards, like on the card, sorry. Right. This is the only thing that I'm not liking for entering right here is I can see one more sweep down first. However, what I should have been aware of, actually, you know what? No, when we jump into the charts, I'll show you because it's much easier to annotate that way. I looked at dollar index and I said, you know what, guys, dollar index looks like it's going up. That's why I was looking at this coming down, right? Because they should be running in the same direction, or sorry, in directly opposing directions. However, obviously, when SMT happens, that's not the case, and that actually gives you a hint that EU is actually going to be flying if it doesn't break below. And so yeah, and I said again, because this was happening on dollar index, the dollar index looked up, and we had this right here. I was like, I was in a little bit of a conundrum because I was like, the low of the day or the high of the day usually comes in at London after the sweep in this type of cycle. And I was really adamant on this cycle playing out with everything that was going on with the week and so on and so forth. So this was a high probability upside day for me. And London usually holds. And so I was like, so I should play this as if London is going to hold, London low is going to hold, and it's not going to sweep. But I just saw a dollar index and I was like, no, that looks like it's going to break up 100%, like no question in my mind. And I obviously know about SMT divergence. So I said, what I'm going to do is I'm just going to wait for divergence. And like I said here, like, I don't want to confuse you all though. So I just understand that the move today is up. Adapt to price as it develops. I'm getting caught up in predicting right now, which always makes me feel a bit frustrated and hesitant. And this always happens to me where when I'm not too sure what's going to happen at that moment, I try to start predicting and I start getting this feeling of frustration. So I start getting hesitant on what's going to happen. I don't know which one I'm going to execute on. This is something that I need to improve within myself 100%. And it's something that I just have to take a step back from and realize, okay, I don't know what's going on right now, and that's completely fine. Let's take a step back and let's wait for price to reveal its hand. And then as soon as it does, then we pounce on it, right? And we execute aggressively. And so this is exactly what happened, right? Perfect. Glad to see that this happened. Potential SMT divergence setting up here, right? All beforehand. What the hell just happened here? Okay. All beforehand, right? As soon as it's coming down, SMT divergence. If like now I'm really bullish. Like this is when I set my limit right here. Once I saw this breaking up here, this didn't break yet. Right? You can see this high is equivalent to this low. You can see this broke, this didn't. So I was anticipating the London low to hold. Now I'm getting confirmation that the London low is going to hold and that this buy model is actually going to play out. I was waiting for sweeps though. And you can see I said, if there's the down option, right? If the down option is available. And I should have been more clear with this though, because this is my limit was set right here. My limit was already set at this point. As soon as I saw the S&P divergence, I just set my limit. And then I wrote this, that if there is no SMT, we'll see this. But this was my second option. I should have been more clear about that. I wasn't. That's my bad. News at 8:30, guys. Be careful. This is when the injection will come in. Let's go. And then I was like, fuck, didn't get tagged. You can see here, like literally so close. Like it was just me being greedy ultimately. Like I could have just taken this 5-minute block. We had this sweep on this inducement right there. As soon as it just needs to sweep one internal point in liquidity, which was right here before it goes. And that was it. It was just me being greedy at the end of the day. And you can see here, I had this order block here. There was this little inducement. It didn't quite tag into it. And I think that's what really made me feel that it was going to get down there, was because this didn't tag into it. And it just front runned it. And I know that there was probably people longing from around these levels, right? Because you have a break in structure, a retracement right back down. Of course, anyone's going to be in that long if they're playing any smart money type of move. And then, yeah, we had a beautiful break in structure here, come back up into this. I was actually going to look for shorts as soon as this structure broke here and it came back up. Same with one of the guys in the group. He was looking at the same thing. I was also looking at that, but that was it was just running down as that was going on. But yeah, A+ setup breaks my heart. As you can see, my heart is broken here. Will Ferrell with some vino. But yeah, that was my good setup. And so let's just dive into it, guys. Let's dive right into it. So starting off with the weekly cycle, you can see, again, I think I've told you guys, I definitely have told you guys about this before, about how Monday, again, this is an ICT on his free channel. It's just the classic setup, the classic weekly move here, right? This one was Monday is the high of the week, and then we go down for the rest of the week. So what ends up happening, again, let's just reiterate, here's the open of the weekly candle, right? So right here, let me just mark it out with this red line. Okay, open of the weekly candle, what happens? Right here, we create the wick of the candle, right? So in the beginning of the week, we create the wick of the candle. Then we move down to create the body. We go low, 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 low. Eventually, we're going to have to create that wick of that weekly candle. Now, I know that within this model, it's either Thursday or Friday that's going to be the low of the week. That's why yesterday I was looking at longs here and scalping longs here where there was some potential opportunities. I got in one and I took partials and it broke even. And then I just decided to scalp for the rest of the day on on TradingView, just because I wasn't seeing too much and then it was so funny because as soon as I started getting the TradingView, then there was all these some opportunities that were starting to set up, which if I just traded my real account, I would have made some serious coin there. But yeah, it's all good. What else was I going to say? Oh yeah, so Thursday or Friday was going to be the low of the week. So candle goes up, leaves the wick, it comes back down. Here's the body. Eventually, it's going to make the wick, and so it's going to make the wick, and then the body's going to close, and then this is going to be that bearish weekly candle, right? So now that I'm starting to see that this ran yesterday's low, like I'm convinced that Friday is going to be the low of the week. Obviously, it has to be now, but I know that we have to leave the wick of the candle. And so in addition to that, we had all this liquidity, right? Just pooling up there with a beautiful kind of correction right here. You can see this little like triangle continuation. As soon as it breaks this low, everyone's looking at going short. You can see, look what happens as soon as it breaks this low. It gives us our buy setup. Boom. We start taking out all those stop losses and fill some imbalance right there. Gorgeous setup. A+ for me. A+ for me for sure. So let's go down into the smaller time frame. So that's why I was 100% biased to the upside. That was it. You can go check the Telegram. I mean, again, if there's going to be people that are going to be commenting, and I've received a couple of messages of people saying that, oh, like, no, you like, this is all hindsight, whatever, on YouTube specifically. And you can see right down here, you can see a couple of dislikes on, even though it's only on 1 or 2 of my videos, there's only a couple of dislikes. All the rest are 100%. But it's those types of people that are still, I don't know what else I can show you to show that I'm, we're doing this all in the, in real time, but there's always going to be haters, I guess. But let's go down to the 15-minute. I don't want to get caught up on those guys. They're wasting my energy. You can see here, daily low. we sweep below the daily low, right? This is the breakdown here, guys. I mean, no better than this. Sweep below the daily low. What happens? You have 10 pips below the daily low. What is it? 315. So let's go 215. Right? 10 pips below. That's what I marked it out. Look at this. Come on. Where are people's entries going to be? You know, I remember when I used to trade a lot of like the retail type patterns, was any of these flags, my entry would be 10 pips in front of that flag, and my stop would be just above, right? Why 10 pips? Because sometimes you can get a little bit of a wick like this, and then it goes in reverses. And so that's how I was taught to put it 10 pips in front, even when I was doing retail. Then I learned from ICT, and then that's when I realized, oh, they're targeting 10 to 20 pips. The reason being is because exactly this, right? Is because this is what I used to do in retail. And I mean, you can see the perfection. If I was trading retail, I'd be super bummed out that I get tagged and immediately go. But so we have 10 pips below here. We have Asian highs maintained. We have these equal highs that we were looking at in yesterday's liquidity pool that we were looking at, right? Then we have right here, which is the opening of this imbalance right there, which at the same time, if you look at the kill zones, this is New York high, right? So we can just say, just put that up there. And so you can see that I won't mark out Asia because I mean, Asia is obviously right here. This one wasn't really anyone significant, just a equal highs liquidity pool. And yeah, you can see London, what happens? Immediately start breaking down, right? We have daily open, immediately break down. We induce buyers into the market here, take them out here. Immediately, we break structure right there, and break structure, we shift the market now to the upside. We're shifting to that buy model. We now make the low in London. This is where you have, or for me, I should have been way more adamant on this holding right off the bat and just waiting to see how dollar index was developing just in case. But I was expecting that there was going to be some divergence after I saw dollar index, but I don't know. I wasn't too convinced right at the beginning, which I should have been, right? Because now I should be saying to myself, as this is developing, that listen, I have an order block right here, right? This last down candle before the up move. Where is my internal liquidity that I know is going to get swept? And I want to be entering below internal liquidity. Okay. So I can refine this candle down below this one at least, right? And what's this stop loss? Right below this level, a 6 pip stop loss, right? To me, like that's completely fine to take, especially when your target is up here, right? And again, if we look at the ICT OTE pattern right here, right, where entry is going to be the 6.2 or 7, you can see it lines up perfectly. We could have got a little bit better of an entry just based off of our entry model as well, right? So let's go down to the 5-minute. Potentially there's something here. Look at that, refined, and look at that, right? Why would this not be able to, like, this would have been completely fine. This would have sufficed for sure. A 5 pip stop, less than 5 pip stop, a 43 pip return, right? So if you took the 5R here, or sorry, the 5 pip stop, again, where's the first area of interest right here that you're going to be looking at? Right here. Why there? Because we have consolidation, a sweep, a break of structure, inducement, right? Inducement here. Grab. So this is going to be our weak high. This could be our strong low. This is going to be target 1. I personally would not have taken profits there though. The reason being is because this is the lower time frame model, but my model based on my setup is targeting this imbalance. So I would have been targeting Asian highs for sure, because I know that that's going to be a strong liquidity pool. I also know that London's high is roughly right here, right? I mean, realistically, you can just mark off this. This was the consolidation that led to the London run. So I would say that it's right there as well. So you have Asia and London kind of sitting right at the same area. So I would have definitely been taking off some partials there. Then we had the run on these equal highs right here. And again, we are still in bearish structure, right? It's bearish structure. And so really, I guess as soon as we break this one, we're not technically but I just know that this is all liquidity anyway. So I know that it could reverse from any one of these highs. I know that has the potential, and you can see exactly what happened in NY here. We rinsed this high. As soon as we rinsed it, look what happened. Boom, immediate consumption, come right back up. Boom. So yeah, so this could have been the trade, guys, and I would have been targeting 1/700s, right? Round big numbers. That's what I like to be targeting in liquidity pools. Again, I brought your attention to this at the beginning of the day, where this was going to be this was going to be one of my targets up here, or these were going to be my targets here. Why? Because we have, this was the kind of manipulation leg. If you actually look at it, probably look at it from yeah, you can see that these, it doesn't really matter what time frame you use. They're really in the same area, right? So just know that this was the consolidation. This was the leg that manipulated it. Okay, well, some deviation of this leg is gonna yield in some good areas to take profit. You can see it lines up beautifully with what? This liquidity pool as our target 1, this liquidity pool as our target 2, and then this fill as target 3, right? Again, you know, you had options to just take off here if you didn't think it was going to get up to there, right? You could have taken all of it off here, and then that you could have been content with that. You know, whatever your strategy entails. For me, all I need, sorry, is that it dabbles into this. It doesn't have to fill it; it just has to dabble into it, and that's what my strategy entails. But again, you guys can do whatever works for you, right? So something interesting that we had here, again, this was an inducing of sellers into the market right there. We have a sweep right there. We have that break after taking out all these highs. Where does it go right back up to? This rejection block. This is trade number 2 for me. Gorgeous trade, because my target, right? Again, I didn't take this. I was at the cardiologist. You guys know that. I got this one swerved, and I was like, okay, I have to leave now to the cardiologist, and that's it. So that was it for me. But I would have been looking to target this level right here, right? This breaker. Okay. The last down move, you can see it respected, boom, blew through it. This is going to be a good support. Okay. So that would have been my target. Additionally, we go into the 1 minute. You can see this. Well, you don't need the 1 minute, but you can see that this is going to be the week low, right? We have consolidation. We have a sweep. We have a break of structure. We have the inducements kind of pooling right here. You can see that W kind of formation. Then we get this expansion out, inefficient move. So inefficiency means weakness. We tag into an area where there's obviously buy side liquidity that has been snatched. It was snatched right here. It fills that right up, comes right back down. This is going to be our first target. Again, look at this imbalance. Again, it doesn't have to fill all the way to the bottom. Oh, what the hell just happened there? I don't know why my computer just went out. Let me go back to this one. I have dollar index on this one too. I had this is where my order was on dollar index. Like I didn't actually set the order, but I just set the tool of this is where I would enter. You can see it got swerved there, but I don't know what the heck happened there. But you can see there, yep, that would have been my target. So this would have been, if I stuck to the 5 minute level, that would have been a good 8-hour trade. And then this one would have been a good 5-hour trade back down. And then at this point, it's already pretty late for specifically for Friday. Personally, I don't think it has enough liquidity right now to go and run that, considering we already ran 40 whatever pips. So I would be more anticipating that after we ran this and we've been respecting this, that the next move is going to be probably down more. To be honest, that's what I would be anticipating. But again, it's Friday right now, so not much else. One thing I did want to go over though is just the SMT, and again, just to review what happened here and what the flaws were, so maybe we can learn from it all together. And is that we should have been confident that this one was going to be the low of the day after this daily cycle and after the weekly cycle and everything like that. After this clean leg, highs, clean leg, we knew it was going up there, but I should have been confident after this broke structure. It's now in a buy model. Therefore, in a buy model, it doesn't need to seek external liquidity. We just have to seek internal structure to provide the liquidity to push price back up into these levels. So interim levels get swept. Don't be greedy with it. Take the obvious one, which was, again, was on the 5 minute. For this time, it was less than a 5 pip stop. So it would have been completely fine to take that. And then and that was it, right? It happened 7:55. News was at 8:30. You can see I said, guys, be careful because or be aware that 8:30 is going to be the injection, right? That's going to be when liquidity is injected to the market. 8:30, no wick, boom, absolutely just rinses these highs. So really good to note there. And then if I just pull up dollar index, you can see dollar index is right here. Okay, don't worry about the TDI here. Worry about dollar index. You can see dollar index. This high, you can see is equivalent to this low, and this high is equivalent to this low. And you can see that this one took out the highs, and then what ended up happening was we immediately consumed and went back down. And so actually, what I wanted to see, and I set another order right here, but you can't do that on FTMO and stuff. So that was just a personal order, right? You can't trade 1 minute or whatever before the news, or 2 minutes before the news, sorry. And so I couldn't actually set that on FTMO, but I did take that or set that on my personal account. Got swerved again on that one, so it's all good. But yeah, just is what it is, guys. Just wasn't my day to catch these, but the analysis was on point, and so that's something I could be grateful for. And you can see here that obviously with the TDI, we also had divergence at these 2 points. So you had really two layers of divergence. You had it with the TDI, and you also had it with the dollar index. So you had SMT and just regular divergence. And yeah, we had interim sweep. We had a ICT OTE pattern here, right? Get right to the 62.71 order block within that level. And you can see there's actually like this was the real big order block, right? Or big order block. This was the one on the 10 minute and the 15 minute. And you can see that lines up perfectly, right? With that OTE entry, which again, if you caught this and you just had your stops below here, you would have been completely fine. This would have been a valid trade. So this, again, today it was just a simple day of me over refining or trying to be perfect and in a thing that doesn't require perfection. It requires consistent execution of a strategy. And so that's just a good lesson for this Friday. And again, super grateful again with what ended up happening. The analysis plays out so I can use that and internalize this situation as being a situation where it's like, yeah, you know what? Although it was wrong, I was right again with my analysis. So now next week I can come into the week and be just that much more confident in my abilities and just push forward and continue. So that is basically it, guys. I don't think that there's really anything else that we can look at. I know a couple of you guys asked for Instagram. So this is it right here. Liquidity trader underscore. That's where you guys can reach me at. That's where I'm going to be. That's where I respond to messages. I try and respond to all of them, but today, I mean, I got bombarded today. I spent a couple hours answering them. And again, obviously YouTube, we're at, like yesterday we were at 500 and now it's at 575. It's just crazy the rate that we're growing at, guys. And I'm just so grateful. So thank you. And then obviously Telegram 373, just growing, super excited, super grateful for you guys. Hopefully everything in there and everything we're working on here is helping. I hope you all have an amazing weekend. Make sure to study and like go over some of the week, like where could you have taken trades? Where didn't you take trades? And all that. I think it's important to study that and learn it, and I'll be doing the exact same. So let's get better, and hopefully next week will be a better version of ourselves, and that's all we can do. All right, guys, sending hugs from Canada, and yeah, I'll see you soon. Cheers.